It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, August 11th, 2015. Cruising our way through here this second week of the 8th month of the year. Hope you guys had a great day. Boy, oh boy, if you followed the strategies we talked about in last night's newsletter, plenty of trading opportunities and very profitable opportunities. Selling at the highs of the range on Euro, Gold, Crude, S&P. Can't wait to go over these charts with you guys and gals because we get even more opportunities waiting for us on Wednesday. Now, of course, before we start, though, I do want to remind you, I teach everything we're going to cover tonight in the video. I teach it to all of our students here at School of Trade. Head over to schooloftrade.com, grab a free trial. You can grab a link on that right on our blog here and register for our free trial membership on the right side of our trading blog. Speaking of the trading blog, I want to remind you guys also to make sure you're watching this video right now on our blog here at Sideways Markets. Now, if you're watching the video on our YouTube channel right now, wonderful. Get a ton of great videos there for day traders. But please remember, though, there are a lot of benefits to watching this video on our trading blog, and there's a link in the description of the YouTube video that'll take you right over here to the blog. 3 main reasons. First of all, you can download all the charts you'll see me using tonight's video. All the charts in tonight's video you can download by following that link right below the video here today. Second thing, upper left-hand corner, I would love to invite you to come out and test drive our live trade room as a guest. If you're not a member of School of Trade, I'd love to give you a free pass. Grab that free pass in the upper left-hand corner. And then last but not least here, that's right, there were 3 things here. We have a nightly newsletter mailing list. All I need is your name and your email address, and I'll send you an email every evening right about 7:30, 8 o'clock Eastern Time when this nightly newsletter is ready to be used. That way you never have to worry about missing another newsletter. So let's recap. Make sure you get over to our trading blog. You can join the free trial on the right-hand side. I also have someone standing by 24/7 to help you guys out with any questions. Download today's charts below the video. Grab a free pass, come out and attend our trade room as a guest, and of course, don't forget, join the newsletter mailing list. And if you join the mailing list, I'm going to send you a verification email to make sure we get the right email address. So if you register for any of these here on our blog, make sure you check your email to make sure you get that verification email from me. And again, if you need any help along the way, I've got someone standing by here 24/7 to give you guys the assistance you need. We'll talk more about that at the end of the video. Let's jump right in here tonight. Another jam-packed newsletter in store for you. Guys and gals, I can't predict tomorrow, but I can tell you where the highest percentage trading opportunities are going to be. And then come out and join me in the trade room tomorrow, and we'll trade it all together. I'll show you guys how we do it here at School of Trade. So let's start with gold. The GC, remember, we're on the 12.15 contract right now. After I came back from break last week, we did roll over to the 12.15 contract on the gold. Gold is bearish after testing the highs of the range in today's session. Boy, I mean, you couldn't have scripted this any better here on gold. We knew we wanted to fade all breakouts, and you can see that's exactly what happened up around that 17.7. Remember what I said last night in the newsletter? The higher it goes, the more lucrative the selling opportunities right now. And today, the news out of China, right, the People's Bank of China, devaluing the yuan, it definitely helped fuel that. What I love about day trading is that which came first, the fundamentals or the technicals? We talked about selling the highs, then all of a sudden the fundamental catalyst comes out, pushes right up to the highs, and then we can sell it right back down. Wait till you see the S&P. What do you think came first on that? The fundamentals or the technicals on that? I'm a technical trader myself, so I don't really care about the news media, what they're saying out there. All I know is we've been waiting to sell those highs. That's exactly what we got here on gold. So where do we go from here? Well, right now, if you didn't get a chance to sell this sucker off the highs, the easy money is behind us right now. Next stop is going to be either looking for price to go up into these resistance areas overhead, looking for additional selling opportunities overhead, or if price goes lower, we're going to use these green lines, these buy zones here, these support levels for buyer failure. So if we go higher, you're looking for reversal patterns, you're looking for buyer failure at these resistance areas overhead. If we go lower, you're really looking for buyer failure at any of these support areas. Now, the one thing you want to be careful about, though, right now is you've got this little trend line coming up here, so you definitely want to be a little bit careful selling into that trend line. That's about all I'm worried about right now as far as selling off these highs. And even then, I'll just make sure that we see a bounce off the trend line, and then you know me, I'm looking to sell right into those buyers' stop losses. If I'm in a bearish market coming off the highs, I want to sell at resistance or look to sell the failure at support. Remember, some of the easiest money you're ever going to make when you're looking at a trending environment here is catching traders trying to go against the trend. Stay patient. Wait for those buyers, try to buy those green areas below, and then simply wait for them to fail. Don't forget, we'll be trading this market live in real time tomorrow in our trade room. Come out and see me. You don't have to do it alone. Let's keep going. Next up on the E-mini S&P, the E-mini. Another almost as if we knew this was coming, right? They can blame it on China. They can blame it on whatever. It doesn't matter to me. We knew this market was most likely, no guarantees, right? That's why we always use stop loss and we always protect our capital. But guys, last night's newsletter, where were we? All the way up here. What did I say? Sell this sucker. Where do you take your profit? Down at the lows. Works like a charm every time. That's why I always say markets that are consolidating like this is some of the easiest trading you'll ever have. It's a little bit counterintuitive. You wouldn't think it's easier to trade a range-bound market, but boy, it really is. Buyer failure at the high, seller failure at the low, and what even the plan is now. E-mini S&P trading inside a price wedge, which tells us to look for selling at the highs, buying at the lows, and we'll stay patient for failures for the easiest profit. What does that mean? Well, it means as we go lower, I'm looking for those poor sellers out there that try to sell these lows, and I'm going to buy right into their stop losses. Same thing, you can't see it well on this anchor chart, but on a faster time frame on the entry charts, you can easily see buyers try once, buyers try twice, and when they fail, we can sell right off that high. So buying those lows, selling those highs, and remember exactly what we talked about last night. Don't be fooled if it makes a run for it. The higher it goes, the lower it goes, just makes it a more lucrative opportunity to fade that range, right? Don't get fooled if this market takes off to the downside. Again, wait for those sellers to try and fail and buy that low. Same thing as we go higher. As we push higher here, I'm buying pullbacks up to the highs, and then, of course, looking for, again, I don't care how high it goes. Wait for those buyers to try and fail at those highs and sell right off those highs. Seller failure at the lows to be a buyer. Buyer failures at the highs to be a seller. And then what's the last thing about these price wedges, these consolidating markets? What does Mama say? Don't fiddle with that middle, right? So be aware, right in the middle of this range, you're always going to have the sloppiest price action. That's why we always say, stay away from the middle, wait for price to dig into those lows, seller failure to buy the low, wait for price to dig into those highs, buyer failure up at the highs, buyer failure, reversal patterns, or wait for the price to tumble back down and sell those wave patterns on the way back down. Just be careful around that 85 even area, right smack in the middle around that 200 moving average. Played this one like a fiddle today. Give yourself a pat on the back on that one for following the chart and not the news media on the S&P. Shall we keep going here? How about some crude? Another market. Boy, we stroked these things today, or last night's newsletter, right? Now again here, looking at this market, just a little bearish. Just a little bit bearish. What did I say last night? My exact words last night. Find times where the market gets above the moving average and wait for it to fail. This is a very, very easy situation to see. It's happened over and over and over again. It's been happening since last spring. Very consistent here on crude oil. You got to keep looking to be a seller. Resist the temptation to be a gambler right? I've heard a lot of people say, well, we've gone lower the past few weeks. We can't keep going lower forever, can we? Oh, yes, we can, right? I flip a coin 5 or 6 times. It's been heads. It can't keep going heads, right? Oh, yes, it can. Not until you have a much larger amount of coin flips, right? Or days in the red, then you can start using that long-term probability. But do not be blinded by the gambler's fallacy, guys. Just because this market's been going lower does not mean it's time to be a buyer. Wait for proof. Wait for proof. So, what's our plan on crude? Well, you can go back and watch last night's newsletter, or the night before that, or before that, and it's pretty much been the same strategy here on crude oil. We're very bearish. We are trading at 6-year lows right now. We did push all the way down, right? Got all the way down below that 43. Very, very strong sell-off here today. It was relatively easy to see coming. We talked about it last night, up around the highs of this short-term channel. Beautiful selling opportunities off those highs, and it was just grab as much as you could on the way down today. And then, of course, you get a longer-term channel. So, plan doesn't change. Be hesitant of being a buyer right now. It's very difficult to be a buyer. You're probably going to get a little bit of buying opportunity here, obviously. The problem, though, is if you try to be a buyer right now, oftentimes, at least in my experience, is I spend all my bullets before I get to the high percentage trades. Right? I know there's plenty of room for this price to go higher, and it probably will go higher. We just saw the API number here Tuesday evening. It was another draw in inventories, probably going to go higher. But the problem is that if I take 100 trades long and 100 trades short on crude, what do you think is going to have the highest probability of success? The 100 trades short. And that's what I'm trying to get at. Yeah, you might be able to get a buy or two off of this, but wouldn't it be a shame to take a couple losses, right? Spend some of your confidence bullets on the way higher, and then all of a sudden you're at the best place to be trading and you're all out of money and you're all out of confidence? That's what I'm trying to avoid. I know there's all kinds of scenarios where we could do this, we could do that. But as a day trader right now, as a successful trader, you have to think in long-term probabilities. That's why as this price collapsed today, we stayed away from the buy side. No matter how oversold it looked, it doesn't matter. If I keep spending those bullets on being a buyer right now, by the time I get up to those highs, I'm going to be paying nothing but my broker, and I'll have no more, again, I call it the psychology bullets, right? You take a couple losses, all of a sudden you get beat up early in the session. You're going to miss out on the easy money, the high probability trades selling these highs. So stick to selling here. 3 ways to get short on crude right now. What are they? 3 ways to get short. How do I sell in a bearish market? Well, as we go higher, again, buyers out there, you may find some opportunities here to buy those dips. Well, if you're going to be a buyer right now, look for times where sellers try to sell at these short-term resistance areas and buy into their stop losses. That's really the only way you're going to safely and reliably be able to be a buyer right now, would be look for short-term resistance. For example, I've got that 43.54, right? So we go up to 43.54. We see sellers try, sellers fail, buy into their stop losses. By having the stops be run, it'll throw fuel on the fire. That was a pun intended, by the way. I know. Stick to the day job, Joe. But we know that if I buy into those seller stop losses, it's gonna throw gasoline. See, I'm full of these great crude jokes, right? Stick around; they get worse. It's gonna throw that price higher, right? The only problem though is again, you don't want to get caught trying to be a buyer when you should be focused on staying patient to be a seller right now. So bulls, careful out there. The best way to be a buyer right now is to buy into seller failure. What are 3 ways to sell? First way is going to be a reversal pattern. First way is going to be a reversal pattern. Members, you guys will learn all about my favorite reversal patterns inside of your intermediate course. Second option, buyer failure. Wait for those buyers to try once, try twice, and sell right into their stop losses. That's where you're going to make the easiest money. Okay? Pay attention there. Buyer failure, seller failure, you're always going to get the easiest instant profit when you're buying into the seller's stop losses, right? Or vice versa. So What's my third way? The third way is the most conservative way. We wait for price to go up. We don't worry about the failure. We don't worry about the reversal. What do? We wait for price to make the turn, and then we sell it right on down. See, professional traders, what they'll do is they'll come up, they'll look for reversals, they'll look for buyer failures, and then on the way down, they'll add to their position after they see that move come and go. Right? Very, very easy. And all we got to do tomorrow is stay patient here on Crude. I've got plenty of resistance areas overhead. Watch that channel high. Watch these channel highs. Again, we're going into an inventory report tomorrow, Wednesday morning at 10:30 a.m. We just got the API number tonight. Every Tuesday night at 4:30, every Wednesday morning at 10:30. Those are your big news reports for crude oil. What you want to remember is that oftentimes markets will price in this news, just setting it up to be a big sell-off tomorrow. Got a nice big draw in the inventory number tonight. Makes sense to me. We push higher into this resistance just in time tomorrow to fake out those sellers once and then drop it after tomorrow's 10:30 a.m. inventory report. Guys, again, I can't predict the future for tomorrow, but I can definitely tell you the highest percentage trades right now are going to be waiting for those, what were they again? Reversals, failures, or wait for the turn and then sell the rips at resistance. Stay patient on crude. Stay patient on crude. And then you got some good targets waiting for you tomorrow. Lots of measured move opportunities here for support levels below. Keep in touch on crude tomorrow. Don't forget, come out and see me in the trade room. We'll be trading this market live in real time. And then last but not least here on this euro, once again, another market that, again, you couldn't have scripted it any better. Pushes up to the high of the range and you immediately start selling off. The euro is very similar to gold right now, where as we come off this channel high, if you missed the selling opportunity earlier on in the day, now what you're looking for is for buyers to try and fail, buyers to try and fail, buyers to try and fail on the way down. Just be aware. We get a price wedge, much like the S&P. What do we know about that? Don't fiddle with your middle, right? Stay away from the middle of that price wedge. That's where you don't want to be getting into new trades. You want to be getting into those trades at the highs and the lows, or getting in at the highs and taking profit at those lows. Euro is bearish. We're trading at the highs of the channel, which means sellers will keep looking for opportunities to sell using those reversal patterns at resistance and buyer failures at support. Now, I do want to mention one more thing here. We are still reacting to Friday's non-farm payroll. We've also heard news out of Greece. Supposedly, the IMF now has said we're good to go on the third bailout. I wish they would give me a third bailout, right? Anyways, bottom line, we can expect to see a little bit more volatility here this week. I don't think this market's done whipping around here. Neither do I think for gold either. We'll see what happens on crude and the S&P. Remember, when we start talking about interest rates, we start talking about monetary policy, we start thinking about the dollar. The dollar should have you thinking about euro and thinking about gold. Okay, by far the most important correlated markets to the dollar, euro and gold. The euro makes up 60% of the dollar index, and of course gold, well, gold is gold, right? It's a shelter market. So we know that there's going to be safe haven flows in and out of these two markets, gold and euro. Where am I going with this? Well, we have an ABCD here. Be watching for one more attempt to run this sucker up. I don't know exactly where the measured move is going to put us for tomorrow, but we do know, though, that we have a channel and a break here. So we know we're probably going to see those late adopters try one more time here. I would love to get my hands on this somewhere up around that 1176 to 1130, 1118, 1137 area up top there. It doesn't really matter the exact resistance area. I want to see this price push into these highs, and then I'll bet you can finish my sentence. Buyer failure and sell right into those stop losses. Or what? Reversal pattern. Or what? Wait for the price to make the turn and then sell those rips with your target being all the way back down at the low of that price wedge. Fade all breakouts on price wedges. We've got one on the S&P. We have it on the euro right now. Fade all breakouts. Look for reversal patterns. Look for failure patterns. And again, the higher it pushes above, the lower it pushes below, the better the trading opportunity becomes. Don't start drinking the bull Kool-Aid if we start pushing to new highs here. That's exactly where we want them, right? All right, guys. Now you get the plan here. Again, the euro and gold, I definitely still expect to see a little bit more fireworks here this week as we iron things out in Greece and as the market continues to digest the idea of no more interest rate hikes until 2016, right? Thanks to, of course, the non-farm payrolls last week. Crude, you know what the plan on crude is. Easy peasy, easy peasy. And then on the S&P, remember, you get yourself a wedge. You're neutral on the S&P, so buying lows, selling highs, you're all good to go on that. I think we got a good plan here for tomorrow. And remember, we can't predict the future, but we definitely know where the highest percentage trades are going to be. And that's all I do here at School of Trade. I help new students launch a career as professional traders. We're not gamblers. We're not doing this as a hobby. We're here to make a ridiculously large amount of money by sitting at our home office computers, on our laptops around the world, all because we have a proven strategy that works in every market around the world. I would love to tell you more about this, but I can't right now, so join the free trial. I'll send you information about what we're all about here at School of Trade. Also, don't forget, you can learn more about our 3 levels of membership here at schooloftrade.com, and we always have someone standing by to help you out. My name is Joseph. Thanks so much for stopping by once again. We are only getting this week started here right now. We'll do it same time, same place, and possibly some new opportunities here for tomorrow. I'll be back tomorrow morning, 8 a.m. Eastern Time, opening my trade room for members, 8 p.m. Eastern Time for our nightly newsletter. You guys be well out there. Be nice to each other. Stick to the plan, and I'll see you in the morning. Adios, amigos. Bye for now.